What in the world is happening with King County real estate? Well, let's check this out. I got some interesting stuff here and some timely analysis from our friends at the Wall Street Journal. So let's go over a little bit of everything here. You're looking at the last 5 years, supply and demand. The blue is the demand, the number of houses that went under contract any given month over the last 5 years. And the green is the supply, the number of new listings that came on the market during any given month. So you got a quick, accurate view of supply versus demand, which I like because, it's not just a good idea, it's the law. And I'm never going to stop telling that joke. I just so you know, if you've been watching my channel for a while, I'm going to make that joke every time because that's funny. All right, now, here's what is actually happening. I don't know if this is funny or not, but we had been seeing what I would have called and what I did call regular sort of normal seasonality. In other words, the pandemic became abnormal. Interest rates were abnormally low. Demand was abnormally high. Inventory was way, way, way lower than normal. You saw double-digit price increases twice a year. I mean, really just doubling in prices since the beginning of the pandemic. Now, what's happened since? Well, interest rates have gone up. They're like 6.75% right now as of today. Huge tripling of interest rates since the pandemic. That has squashed demand, not surprisingly. Okay. So, people have less available, they can afford less house, and there aren't cheaper houses to buy. So they stop buying. Now, will there be cheaper houses? At some point here, they're going to have to be. If people need to sell their house, they're going to have to get used to lower prices. Now, we'll get into that. That's what the Wall Street Journal article is about. We'll get into that in a second. Just a couple things to look here, to notice. You had a little spike in demand in September, a little bit up from August, right? That's not that unusual at this time of year to see a little bounce, not that unusual. But here's what we're really looking at is this dip in demand. Demand was already lower across than any of the previous years, and now it's even lower yet. So there's a disparity here. This is 1,600 under contract compared to 2,600 that went onto the market, or 2,800. So that's, what did I say, 1,600? Yeah, so that's a 1,200 house increase, not quite, probably 40% less demand, right? Something like that. That's huge. That's a huge disparity between supply and demand. If you're selling a house right now, you're sitting on the market longer and you are dropping your prices, or you're starting at a lower price in King County than you would have expected earlier in the year, period. This disparity is enormous. There are far more houses available than buyers, and that trend is continuing to get wider. Okay, you're crazy to say it this way, but you're still in a seller's market. You're not yet at 3 months. 3 months demand, 3 months available supply, 3 months available supply is what we call a balanced market, the bottom of balanced market. So we're still not at 3 months of available supply. We need to get a little bit further apart. We're just not used to anything less than that in this market. So let's just jump pre-pandemic and see how that compares, because the pandemic is the abnormality. But let's look to see, we have a little bit more supply now than we did. This is October, so let's go year to year. September 2019 was 2,700, so that's about where we are. Yeah, that's just about same as 2019. We are currently at the same amount of supply. Okay, and you can see that even in October of 2019, it went up a little bit. Okay, so we're about the same in supply, but demand-wise, you're at 2,100 here. You only have a differential of about 20%. You're double that differential right now. That's a big deal. If you go back here to 2018, you had 3,200. So you had way more supply in 2018. But even then, the differential was August, and we're September right here, 1,800 to 2,800. It was about the same. So this is like 2018 in terms of supply and demand. It's not as much supply and demand. It's not as much. Supply is the same as 2017, but demand is lower now than it was in 2017. So this is sort of normal seasonality. I mean, at least you can find analogs for it in the past. It's just you got to go back to pre-pandemic, and human beings are so recency biased that this looks like a crash. In fact, this is the interesting article I found in the Wall Street Journal to talk about. They're talking about housing prices in this. This is the headline. Okay, so this is fear-mongering headline 101. The U.S. housing market to see second biggest home decline since the Great Depression. That seems tragic when they say it that way. That's like tragedy. Okay, except in reality, this is like 2018. All right, now here's where we're at with with price declines. You're going to need to see some price decline. They're talking about 7% by the end of 2023. Okay, well, we just had double. We went up 50, 60%. Easy. Some houses double. My house, when we got the tax assessment, there's the word, Aaron, tax assessment, was double, right? So we're talking about a 7% topping off of that. It's not tragic. This is not a collapse, but you're comparing it to the Great Depression. It's going to occur like a collapse, and people are going to make all sorts of irrational decisions if they base their activity on the headlines. Don't do that. All right. Just don't do that. There's no reason to. This is a topping off of the market. Why? Because it's 6.5%, 7% in interest. You can't afford the same price house as you could have. If you're selling now, you're going to need to take 7 to 10% less than you would expect from the beginning of this year just to get people interested, given how little demand there is. They're talking about an overall 7%, but at this time of year, there's even less demand than normal. So that's just the way that's going. You're going to need to be responsible for it. And if you're buying a house, huzzah, this is the easiest time to buy in the last 3-4 years. Now, you got to deal with the 6%, 7% interest rate. You're still going to wind up with a little bit less house. So you can find a house easier. You can negotiate more. Seller may, in fact, be able to kick in some extra cash at closing to buy down that interest rate. And you're still, at the end of the day, going to have to buy less house than you could at the beginning of the year. It'll be easier to buy that house, but you're going to get less house than you could at the beginning of the year. That's the interest rate dilemma for all of us. That's what's happening now. I don't see this as a collapse yet. I don't see this as a crash. This looks radically different than it has in the recent past, but not radically different than it has over the last 3, 4, 5 years. Okay. So if you see something else in there, let me know. Now, every neighborhood is different. Every person is different. Every situation is different. Take a minute, subscribe, do all that stuff. Let's get rid of this. Look at that. Hi, Chandra. Well, we're not going to talk to her. Take a couple minutes, subscribe, like, share this. Give me all your love. All right. Let me know if you have any questions. Aaron Hendon with Christine Company over EXP. What in the world is happening with Pierce County real estate? Well, let's check it out. This is really interesting. And if you find these kinds of things interesting, then watch the King County update as well, because this is really different than what's happening in King County. What you see here is a supply and demand graph, last 5 years. Blue is the demand. That's the number of homes that went under contract any given month. And the green is the supply, number of homes that came to market during those months. So what do you see? Well, you see the outlier that the pandemic was, 2020 and 2021. Way lower supply, way higher demand than, the other years. And with interest rates explained a large part of the demand, and the pandemic explains a big part of the supply part, which is why housing prices have doubled or thereabouts in the last couple of years. What you see now in 2022 looks not terribly dissimilar to 2018, 2019, 2017, those graphs. Demand is down and supply is down, but they're down about the same amount, meaning the relationship between supply and demand is about the same. So what does that mean? That means if you're looking to sell, it's very similar to this time in 2018. If you're looking to buy, it's very similar to this time in 2018 as well. 20 had much closer supply and demand gap than 2018. 2018 had about the same as this year. 2017 was somewhere between the two. Overall, let's just talk about it like this. First of all, you're going to see a lot of headlines like this. Talked about this in the other video as well. King County. Wall Street, U.S. housing market to see the second biggest decline in home prices since the Great Depression. That is a fear-mongering headline designed to get you clicking on the link, designed to have you think about this as being in some terrible zone. But the truth is, you're not any different than 2018 here. Home prices may in fact come down a little bit, maybe 2, 3, 4% in Tacoma. Okay, well, they doubled over the last 2 years. So you're not really talking about home prices coming down. You're talking about they're being topped off. Okay, fine. But that headline, which you will no doubt see a ton of, is designed to get you to click, not to accurately describe what's happening. And, what's happening in Tacoma or Pierce County in general is really different than what's happening in King County. King County, you're seeing a much bigger disparity between sellers and buyers. You're seeing a much more even balanced market. This is still a stronger seller's market, which it's been for the last 5 years. So, what does it mean? It means if you're buying, you could probably find a bargain. You can definitely get in. You're probably not facing bidding war situation. If you're selling, you'll get it sold. You probably get it sold at about what you're asking for it if you priced it intelligently, not like it was April of this year, but like it's, October of this year, which it is. So you got to be responsible for where you are, which is in an interest rate environment, which is triple what it was over the pandemic. So people just cannot afford what they could afford before. Just that's the way it is. So if you're selling, you got to be responsible for that. But otherwise, this looks like a normal seasonal year for yourself. Like 2018, 2019, there'll be some bargains. It's going to be easier to sell at the end of the year when there's no other inventory. It can be really easy to sell, and probably come next spring, it's going to be much harder to sell. So if you're thinking of selling, don't wait. That's craziness. And let's see what happens. But I certainly don't think, even when you read this article, you're left with, it's a 7%, which is the second largest home price decline since the Great Depression. But it's 7%. Let's not freak out over a 7% decline when home prices have gone up 100% in the last 2 years. Let's just not freak out about a 7% decline. But this headline is very, very, very good at mongering fear like that. So, look, every situation is different. Everyone's unique. Everyone needs different things. So let me know what your situation is, how I can help. Make sure you like this, share it, follow, subscribe, send it, do all this, comment, give me all your internet love, okay? Let me know if there's anything I can do with you, for you, in the world of real estate. Aaron Hendon with Christine and Company over at eXp Realty. Talk to you soon. What in the world's happening with Kitsap County real estate? I like saying that. Kitsap County. Try that. Say that once. Kitsap County. It's all exciting. All right, here it is exciting what's happening with Kitsap County real estate. You're looking at the supply and demand graph for the last 5 years, and you can see the blue is the demand. That's the number of people that number of homes that went under contract in any given month. And the green is the supply, the number of homes that came to market during those months. All right, so let's look. What you're seeing is you can see the pandemic, 2020, 2021, sort of abnormal like years, way more demand. Oh, what? 2% interest? Let's buy a house. All right. Very little supply. Well, the pandemic, we're not going to sell. Where are we going to go? Okay. So that created enormous price valuation increases, which we're paying the price for now. All right. But what you can see is then 2022 looks pretty much like 2018. Doesn't look radically different than 2017, 18, or 19. It's just not radically different. So, you see a decrease in, this is sort of a normal drop off in supply and a normal drop off in demand. And what's predictable is you will see this take over, that there'll be, in fact, less houses coming to market than there is demand for the rest of the year. This is the easiest time to buy in the last 3-5 years, right? For sure, the last 3 years. 2020, 2021, those 2 years, and then this year, easiest time to buy. Now, that's likely to go away come the end of the year. Why? Because people don't sell at the end of the year. So there'll be less inventory, less houses to buy, which means the other side of that is if you're thinking of selling, you should be selling in November, December, and January when no one else is. For God's sake, do not wait till May, June, and July when these huge spikes in green predictably show up and everyone is selling. Imagine that you're trying to sell a house in an increased with increased competition and increase in interest rates, this is why you're seeing a decrease in housing prices now, because you have all these people that put their homes on thinking it was April or May, and it's not. It's October. So you're going to get less interested buyers today than you would have in the spring, but predictably you'll get more. You'll get more for your bang for your buck come the fall, November, December, January. Now, one thing not to worry about is this kind of a headline from our friends at the Wall Street Journal: the U.S. housing market to see the second biggest home price decline since the Great Depression. That is fear-mongering at its finest. I love that headline. Why? Because it's accurate and it's completely misses the point. It's accurate. That's right. The 7% is what they're talking about. 7% decrease. All right. And that is the second steepest decline. The first steepest decline was the crash where we lost 27% of the housing value, 27%. The Great Depression was 3.5%. So this is the second, okay, but it's 7%. You just saw housing prices double in the last 2 years, and you're going to top it off with 7%, but it doesn't say it like that. It says that the housing market to see the second greatest home decline since the Great Depression. All right, accurate, and I don't know that I would get my panties in a bunch about a 7% top off on housing prices. It means you can expect to get less for your home than you could have earlier in the year by about 7 to 10%. And okay, you're okay. You'll make it. There's no collapse here. And right now is the easiest time to buy. So if you have questions about your situation, we normally look at Bainbridge as a specific area in these updates. So let's do that. Okay, this is the Bainbridge graph, just Bainbridge. Hang on. I want to take off the Kitsap County part of that because Bainbridge is half in King County. And you can see that supply never got above really pandemic levels. Now, demand is way down, and it's really down similar to 2019, not very much. You're talking on Bainbridge. You've got a chance to buy, but it's not the kind of inventory that we saw pre-pandemic. Okay, it really is. It's the same kind of inventory supply that you saw during the pandemic, and slightly decreased demand, more to match the kind of demand that we had pre-pandemic, right before the pandemic. So it's not as easy. Look how close the supply and demand is here. The supply is to the demand, meaning it's not as easy to buy on Bainbridge as it is, certainly not in King County and as a whole, or Kitsap overall. That is very, very close to each other. So that's just something to be responsible for. If you're shopping Bainbridge, you're not going to find the kind of bargains. You're not going to find the kind of price deals that you could find in the other counties. That's just the way that is right now. All right. That's why it's interesting to me. Anyway, your situation's unique. Let me know what I can do for you. I'd love to help. Aaron Hendon with Christine and Company over at EXP. Share this, like it, comment, subscribe, everything you can do on social media. Do it. Go do it. All right. Talk to you later. Bye. What in the world is happening with Vashon real estate? Well, let's see. It's pretty cool. All right. And, if you compare this to King County overall, you can see this is radically different than what's happening in King County. It's radically different than what's happening in Pierce or Kitsap, for that matter, our surrounding counties. What you see is the last 5 years of supply and demand. Blue is the demand, the homes that went under contract. Green is the supply, the number of homes that came to market any given month for the last 5 years. And on every other county, you can see a real difference between the pandemic years and the post-pandemic years, and you cannot see that difference here. 2022 was almost exactly the same as 2021. Really very little statistical difference, and really super close to 2020. Real estate on Vashon has not gone back to pre-pandemic levels, which is almost the case, or the case almost on our surrounding counties. That we have not gotten near the amount of inventory that we used to have pre-pandemic. If I can even go back further and you get a bigger picture than 5 years. Now it looks even more apparent that we've just never recovered from the inventory's never recovered from the pandemic. I don't know if it's recovered because I don't know that we're shooting to recover. This just means that homeowners are going to get top dollar for their homes on Vashon and for the foreseeable future, that there's no radical change in what's happened, that the And even you could say the interest rates have not greatly impacted home buying. It's just you don't see a huge decrease in relative demand from the past. You just don't. So, it indicates that home values here are going to stay pretty much solid, that if you're buying, you got to be quick. You got to be rich. You got to pay top dollar for a house on Vashon. It does not look like this is following any of the local trends, much less any of the national trends, where you're going to see all kinds of articles and all kinds of stuff like this one about second biggest home price decline since the Great Depression, which by itself is sort of a specious and bullshit headline. Well, it's not inaccurate. It doesn't really paint the accurate picture of what's happening, because you're talking about 7% in a decline in home values nationwide. All right, 7%. We just saw home prices double. So taking off the top 7% hardly seems like the greatest decline since the Great Depression. Second greatest decline. The greatest decline since the Great Depression was the housing collapse, and that was 27%. You're talking about 7% off of, Great Depression was 3.5%. So it's really not this huge, impactful event that that the headline would leave you to think. But the point is, you're going to read that, you're going to see other things happening in Pierce County or King County or on the peninsula, and you're going to think, when's that coming here? And it might come here, but it ain't here yet. Okay, right now, housing is as valuable as it's been anytime during the pandemic, because there's just not the level of inventory, and demand has been steady. That is the way that's going here on the island. So if you're looking to buy, you're going to need to be quick, and you need to pay top dollar. If you're looking to sell, you should have an easy time doing it, and easier time as the year goes on. November, December, January, there'll be way less people selling, and demand won't go down nearly in proportion. You'll be able to sell your home easier come the winter than you will be in the spring, especially if the trend of the surrounding areas catches up to Vashon and that winds up being more inventory. Always better to sell in a low inventory environment. So if you got questions about that, or you want to know more about your situation, that's what I'm here for. All right, let me know what I can do for you. Aaron Hendon with Christine and Company over at EXP. Make sure you share this, like it, do all that good social media stuff. Let me know what I can do for you. Talk to you later.